Folks, misinformation is becoming a big problem. I'll get into that and then the latest home prices and insights for the City of Toronto for week ending June the 5th, 2024. Last week, on June the 5th, Bank of Canada made their announcement of lowering the lending rate by a quarter point. Now, we knew this date was coming. Everybody knew this date was coming. And personally, we were, my team, we were looking at this and thinking, do we do a show specifically just for that? And should we do it now right away that Bank of Canada has made their announcement? And we're thinking this, and we thought, you know, maybe we should get Anthony Venuto from InTouch Mortgage Solutions, seeing how nobody's really calling us directly regarding the bank rate. They're calling their mortgage person. And this is right up Anthony's alley. Like, this is in his wheelhouse as far as the Bank of Canada lowering rates. What does it mean for mortgages and everything related to that? So that's what we did. We spoke with Anthony. We arranged a time to have an interview. And that was our Sunday show. And it's if you want to watch it, it's the very last video we uploaded before this one here now. But man, that day on Wednesday when the Bank of Canada made its announcement, the social media airwaves was inundated with all the experts on the planet, and I say the word experts loosely, talking about the whole Bank of Canada lowering rates, and tons and tons and tons of realtors. It seems every realtor and their mother had something to say about it on social media and promoting what this means. And what do you think the overall theme was? Bank of Canada lower its rate, you better buy now before prices go up. That was the overall theme. You better buy right now before prices go up, and trying to pressure you to listen to them and buy now. Now, there were a ton of great articles, a ton of great shows on social media that really looked at it, explained what happened, and really talked about in real terms what it actually meant, a quarter point, and maybe what we can expect over the next little while. And they weren't putting any kind of pressure on you that you gotta buy now, but those were the minority of posts. The majority from realtors was buy now before interest rates go up. This is what I have a problem with. I personally know some of those realtors doing those posts, and I personally know some of them are brand new in the business. Brand new. The ink is not even dry on their license yet. And they were posting, buy now before interest rates go up. Look, just because you just got your real estate license and you're allowed to help people buy and sell property doesn't instantly make you an expert. There were also very seasoned realtors saying the same message. So this is not just because you're a brand new realtor. There's very seasoned realtors saying the same thing. My problem is there's going to be some of you that are going to believe these posts, that are going to believe that buy now right away before prices go up. And you're going to be misled into doing something that maybe isn't right for you. Look, I don't know if you should buy now or you shouldn't buy now. That's a conversation that needs to be had. You need to look at your whole financial position. You need to look at, why you're buying, what's going on, are you selling something, and how does all that fit into financially? And this may be the right time for you to buy. It may not be. The point is, the majority of these posts had a time limit and trying to put pressure on you, buy now before prices go up. how do they know prices are going up? That's just a quarter point. Like, how do they know? This whole show that we do and showing you the numbers, we try really hard just to give you what's really, really happening without all the hoopla and all the media and all the pressure. These are the real numbers. Here's what's really happening. Here's what we're experiencing in the road. But, you know, some people have lots and lots of time to put posts out there that try to push you and to try to scare you into doing something. Be careful where you're getting your information from. And if you choose to transact, buy or sell, make sure the person you're talking to is somebody that you trust, somebody that's giving you information that works best for you and your family. Who you hire matters. Who you listen to matters. Where you're getting your information from matters. If you feel this video can help somebody you know, please pass it along. If you get value from what we're talking about, subscribe. And if you want to speak with me about your real estate situation, selling, buying, it's really simple. Up here, there's a link. Below this video in the description, there's a link to my calendar. Click on that, book a time that's convenient for you, and we'll talk about whatever's on your mind. Now, let's get into the numbers. Here we go, folks. City of Toronto freehold properties. Here's a quick summary. Detached, town semis. I do have condos here. We're not talking about condo apartments in this show. That's tomorrow's show. But it's here for reference. The difference in price of average sold price between condo apartments and detached, $935,000. Big difference in average sold prices. Let's start off with the detached market here. For week ending June the 5th, 166 detached properties were sold. This is only for the City of Toronto. 166 were sold. Which way are sales going? You know, I'm always looking for the trend. I like to say we're trending up, trending down, constant, flat. It's hard to say which way sales are going right now. 45 of those, of the 166, sold at $2 million or more. Now, average sold price, also a little tricky right now to spot a trend. Average sold price is $1,702,000. Now, if we're talking just 3-4 weeks ago, I could say, well, since the beginning of the year, average prices have been trending up. But the last few weeks, prices have been a little bit all over the place. It's hard for me to say which way prices are going right now. Compared to last year, $1,702,000 is 5% lower than last year's average sold price. The median price is 6% lower than where the median price was this time a year ago. The dotted line, that's a 4-week moving average. And both for median and average price, you could see for a while prices were trending up. The last few weeks, I guess when you look at the 4-week moving average, it's showing that prices are trending down. So maybe that's the trend we're on now. Over the next few weeks, I believe that's going to become more clear to us. 166 were sold. 53% sold at list price or more. Listings are up from the previous week. 453 were listed. Now, listings will be up and down each week, a little higher, a little lower versus the previous week. But active listings is really showing an increase in active listings. If we just go back 3 months, we used to have 903 active listings. Now, in the same market, almost 4 times that, 1,939 active listings. That's a big change. Sorry, did I say almost 4 times? I meant about double, a little bit more than double active listings right now. Big change in the amount of properties sitting on the market. And these are only detached properties sitting on the market available for sale. Months of inventory up from the previous week. We're sitting at 2.7. If we look at 3 months, 2.7 is the second highest week we've had of months of inventory. We're starting to approach a balanced market. We're at the very top end of a seller's market. And that's why you're going to see pockets out there. Some, because this is an average 2.7. Some areas, well, actually, let me show you on the map. This is Toronto broken down in 9 different sections. The whole city has an average of 2.7 months of inventory. Scarborough, sitting at 1.9 months of inventory. Big difference. East York Riverdale sitting at 1.9 months of inventory. Etobicoke sitting at 2 months of inventory. And then you get other areas, 4.6 months of inventory. Willowdale, Bayview sitting at 4.5 months of inventory. So the experience, it's kind of a little bit all over the place. You're going to experience areas that have a balanced market. You're going to experience areas that have a seller's market and different variations in between. There's going to be some pockets, there's just so many listings, it's going to feel more like a buyer's market. Not too many of those yet, although properties are sitting out there right now. That's the detached market. Let's look at semi-detached properties. 59 were sold. 17 of those were at 1.5 million or more. That's for week ending June 5th. Average sold price this week, average sold price plummeted from where it was the previous week. It's now sitting at 1,262,000. The previous few weeks, or the previous months, actually, we would say average price has been increasing. This week, for whatever reason, the composition of the sampling of the 59 bring the average price extremely low. I would not be saying that's the new average price for semis. I would be saying, hey, when you look at this on a weekly basis, every now and then there's going to be a week or two that's out of whack. Maybe this is it, and over the next few weeks, we'll be able to see that. Compared to last year, 1,262, 10% lower than where we were. The median price also, year over year, it's lower this year by 10%. And months of inventory sitting at 1.4 months of inventory. If we look back, 1.4, we've seen it a few times, but it's not such a big deviation from where we were before, although it's up from the previous week. 63% of the semis that sold at list price or more. That market is still somewhat competitive. Townhouses, 15, only 15. These are freehold townhouses sold for week ending June the 5th. 6 of those were at $1.5 million or more. Average price is up to $1,372,000. 1,372 is 10% higher year over year. The median price is 16% higher year over year. Average price and median price, they're bouncing around quite a bit. If we look at the dotted line, the 4-week moving average, kind of looks like to me prices of overall average out to be kind of flat, although on a weekly basis you'll see the peaks and the valleys. Towns, months of inventory sitting at 2.8 months of inventory. Here's a quick summary. Pretty much a balanced market in many areas, although technically when we look at the number, the months of inventory, and just go by the actual number, well, 2.8 still is in a seller's market, but it's right at the top end, and that's an average of the whole area. There are pockets where it's either one way or the other, but you're right at the borderline of a balanced market. Same with the detached of 2.7. Semi sitting at 1.4 has more of the feel overall of being in a seller's market. That's the freehold market for the City of Toronto. Thanks for watching. Have an awesome day.